Hey, what's up, guys? Wealth inequality is on the rise. In this video, we're going to talk about the vast wealth inequality in America, how it's gotten much worse during the coronavirus pandemic, how it is related to inflation, politics, the media. We're going to try and tie it all together. And at the end, I will give you my recommendations, in my view, what you can do about it. So let's get started. So I found this article on zerohedge.com. I'm going to drop the link in the description below. If you don't know about Zero Hedge, I just discovered it. It's a pretty cool website with a lot of interesting financial content. The author of this article presents a series of graphs and argues that America is very kleptocratic. Let's have a look at what he's saying here. So first of all, here we have a graph of the wealth distribution in the United States. You can see if you go back to 1970, the bottom 80% did not have as much as the top 1%, but they certainly had more wealth than the top 0.1%. Since about 1970, the relationship has started to go the other way. And most recently, yes, the top 1% hold close to 20% of all the wealth in this country, and the bottom 80% has seen their share fall to about 12%. Another very interesting graph, government transfer payments as a percentage of total income. So if you go back to the 1960s, you have roughly 6% of household income coming from the federal government. Now we're looking at about 34%. Imagine that, guys. 34% of all household income comes from the government. The government doesn't produce anything. So when I say it's coming from the government, that means it's coming from the tax dollars of another citizen. Alright guys, so these two charts kind of present a bit of a puzzle, don't they? We have extremely high wealth inequality continuing to rise. At the same time, the government is giving even greater and greater amounts of money to people that don't have as much. How can this be? Well, the answer is in the middle class specifically. That special group of people that pretty much every politician claims to support. Let's have a look at America's middle class. I think this graph explains a lot. Here we're looking at a graph of middle income share. What that means is what percentage of the GDP goes toward the middle class. And we're comparing that to the median income per person in US dollars. So you notice a positive correlation. You notice countries you probably think of as being fair, democratic countries, for example, Norway, have a very high income per person, and the middle class is the highest share of that income. On the other extreme, you got India, Mexico there at the bottom. Notice an outlier here that doesn't really fit the pattern. Yeah, the United States. Although we have very high income per person, the middle class's share of that income is very low, and it has been shrinking for decades. Now, how is this possible? Pretty much every politician claims to support the middle class. How do you win an election if you campaign on policies like tax the poor, tax the middle class more? Well, the answer has something to do with inflation. Here's America's total debt and their GDP, and that gives us a little ratio, debt as a percentage of GDP. If you think about GDP as your income or production, this is very similar to some accounting ratios we would often use to value companies. So you notice in 2004 it's about 59%, creeps up to close to 100% there in 2013. Well, recently, as of this April, we're at about 122%. So debt has far surpassed what we're actually producing in this country. Now, how are we going to pay for all this? Well, we're printing money. As you can see from the M1 money supply chart here, if I zoom out a little bit, let's look at the past 5 years. No matter how you look at it, pretty dramatic increase in the money supply from about $4 trillion to where we are now, about, $18 trillion. Probably higher, guys. Remember, they discontinued this series. We don't have the most recent data right now, as I covered in my other video. So the result of all this is massive inflation. You're already seeing it in a lot of commodities. You're starting to see it at the grocery store. Here's a quick rundown. Lumber prices up about 265% over the past year. You got corn up 84%, silver 65%. You can look at the list for yourself. We definitely have inflation. So all this spending is leading to massive inflation. And, the scary thing is most Americans support the spending, according to a recent poll by CNBC. So I asked the question earlier, how do you win elections on policies like tax the poor, tax the middle class? Well, you don't exactly spell it out for everyone like that. The answer is you campaign on big spending, which leads to more borrowing, which leads to inflation. Inflation is a tax on everyone. When the price of things goes up, everyone holding US dollars feels the pain. The difference is, guys, some people feel the pain more than others. So for richer households, those that own real estate, those that have owned stocks, maybe even cryptocurrencies, this whole pandemic has been wonderful. It's been really great for their wallets. So if you look at the S&P 500 early 2020, a lot of people said it was overvalued anyways. It's approaching 3,400. We had the pandemic, we had the huge drop there, but guys, just a year later, the S&P is valued at close to 4,200 right now. So while I'm sure inflation has hurt the salaries of these higher income earners, it has really not hurt them as much as it has hurt others because they have the assets and their assets have gone up in value. The people hurt most by this are people that don't own any stocks, don't own real estate. They haven't enjoyed any of this price appreciation. And now with real estate values climbing even further, they're that much further away from being able to buy their first home. So inflation is really a tax on the poor, and it's a very sneaky tax. So it shouldn't be surprising that most US politicians have adopted this stance. This has kind of been the way it is, no matter who's in power or which party's in power, guys. Since about 2000, that was kind of an inflection point. The share of labor compensation in GDP has really fallen there. That's the percentage of GDP that goes towards paying workers. At the same time, we've kind of seen an exponential growth in corporate profits since that time. So you notice this chart goes way back to 1950 or so. Corporate profits do creep up over time, but we have not seen anything like we've seen since the year 2000. They really just explode. You have a bad year now and then, but of course you get bailed out by the government, and they're just taking off. If we keep having policies that favor the rich, it just seems that it would follow that people would step up, they would make the right votes, and we would get people in there that would make policies that benefit most people. This is where the media comes in. So this is a very interesting picture. You have about 6 companies that collectively own everything in media. So the same company, Time Warner here, that owns CNN also owns HBO, TBS, TNT, Cartoon Network. They own Time Magazine, People Magazine, etc. That's a lot of power. So what generally happens with these media companies is they tailor their content to their own interests. They want to generate more viewership, they want to generate more clicks. People talk about, why is there such polarization in American politics? Why are we so polar? We're very extreme. You go to other countries, people with different political views don't hate each other's guts. They don't want to rip each other's throats out. Well, really, guys, in my view, it's kind of the media's game. And what they're doing is, on the one side, they're running stories that make you absolutely hate the other side. The stories are all the same. They kind of have the same general narrative of, if only the other side would stop being complete idiots, we'd, solve all these problems in our country. And both sides play the game. And so you have a general population that hates each other, but doesn't pay attention to what's going on in Congress, doesn't really hate the uber rich people that are running everything. I gotta say, it's quite brilliant. So a good example of counterproductive policy, which sounds good in the eyes of many voters, is this whole $15 minimum wage thing. So economists have shown, and they've shown it in many countries, whenever you introduce a minimum wage, you're messing with the free market. What happens is many employers choose to hire fewer workers, or in some cases they simply have to shut down their business. The result of it is an increase in unemployment. In addition, the minimum wage doesn't really hit the rich people. It actually hits the middle class. The middle class are the ones that predominantly own small businesses. They're the ones that are most concerned with having to pay higher wages. And so, laws like this just kind of shift the balance between the poor and the middle class, while leaving the rich virtually untouched. It's also worth noting that by the time they actually pass this, the inflation will be at such an extent that this minimum wage may have no effect at all. Alright guys, so what are we going to do about it? Alright, the video so far is kind of depressing, but there is a light at the end of the tunnel. The key is to act like a rich person. You got to put your money in stocks. You got to put your money in real estate. As long as the government spending continues, I expect to see inflation. The more we spend, probably the higher the inflation we're going to see. So when you see my videos and I'm analyzing a stock, we're figuring on certain percentage of growth rate and cash flows, it may very well be that I'm underestimating all of the growth rates. If we see inflation like you've never seen before, all of these companies' growth rates are underestimated. You're going to see earnings just go up tremendously. And if you own those businesses, your wealth is going to go up tremendously. It's going to be protected from that inflation. Now, some businesses are better than others during inflationary times. Let's talk about that. So the worst type of business I can imagine during inflationary times would be an insurance company, because you get your money right away and you have to pay claims out later on when disasters happen. Now, when those disasters happen, you got to pay for flood damage or tornado damage or whatever. Asset prices will have gone up and you're going to get hit with a much bigger bill than you expected. So I would try to avoid the insurers. But generally speaking, any business where you have heavy reinvestment needs, any business that's growing and needs to constantly reinvest, in R&D and new capital expenditures, things like that, they're going to be hurt more by inflation because the cost of those reinvestments are going to be higher. So what does that leave? Cash cows. Tobacco companies, grocery stores. I just did analysis on eBay. That would be a wonderful business during inflationary times, I would think. Any business that can raise their prices, they got to have that pricing power. They got to be able to get away with raising prices, and they don't need heavy reinvestments. Again, if you have the means, I do recommend getting a mortgage during this time. So anyhow, that's all I got for this video. I hope it gave you guys a lot to think about. I hope you enjoyed it. If you did, please hit that like button. It really helps me a lot. Also consider hitting that subscribe button. And let me know what you think in the comments below. Thank you.